So I look at the industrials and automobiles, and today we'll be talking about Tesla, looking at the company update following the third quarter results. The results came in below what was expected by consensus, as volumes were weaker than what consensus was looking for. So this resulted in a top line miss. Also, we had margins on an operating profit and on a gross profit level missing, and they're highlighting high raw material costs coming through in this period. So they're looking at that easing down going into Q4. I mean, overall, the results were a miss, which coming in below expectations. But in terms of the outlook, the company is reiterating their guidance. It's starting to look like a high ask in the sense that they're looking at achieving about a 50% annual growth in volumes. I think the run rate is currently around 40%, 43%. So it does look like expectations are very high, but we still think the company is quite innovative. Business model is strong, but in terms of expectations still remains a little bit high. We value the company in a price to earnings recommendation in this period or following the third quarter results. We upgraded from a sell to a hold, and this is just the back of share price taking quite a beating in the last quarter or so. So our exit multiple still remains at 30 times. We haven't changed. Our intrinsic value, we've adjusted for the share split of 3-1 in this period, and also we trimmed our bull case scenario. So I think the bull case is a huge ask what we initially had, given the run rate and performance at this time. So overall, our intrinsic value is down about 6%, and we also adjusted it for the share split in this period. Looking at the event, which was the third quarter results, volumes were up 43% roughly to 344,000 units. That was a miss by 5%, which also resulted in top line miss, regardless of revenue being up 56% year on year. Operating profit in this period of 3.7 billion versus 2 billion, significant improvement, although margins slightly contracted from the previous period. So margins in this period were 17.2% versus 17.5% in the previous period, again highlighting the higher raw material prices that came through. So we're still seeing strong selling prices on the automobiles of roughly 11%, but the run rate is coming down. In first quarter it was roughly 17%, second quarter roughly 30%, now at roughly 11%. Volume still strong, up 43%, and there was also a forex impact of about 250 million in this period. So operating profit still strong, but see selling prices slightly coming down, and we're also seeing volumes as well tracking slightly below. Free cash flow is quite strong in this period of 3.3 billion versus 1.3 billion. Quite a significant improvement.
Thank you very much for joining us today.